Imagine owing $4,000 on a credit card and making minimum payments on time every month. It feels responsible until you realize that after 22 years of those on-time minimums, you've paid over $9,000 in interest alone and you're still in debt. You've been lied to. They pitched minimum payments as a convenience and a safety net. In reality, it's a marathon you never finish, and the finish line keeps moving farther away. Today, we expose the minimum payment scam, how a tiny monthly checkbox becomes a multi-decade sentence in financial purgatory. Welcome to Money Traps Exposed, the series where we tear down the hidden mechanics that profit from our pain. Only on the official FinFlix channel. Today we're demystifying the most insidious debt strategy ever invented, the minimum payment. If your goal is to escape debt, truly escape, hit subscribe, ring the bell, and get ready to rewire everything you think you know about credit cards. In this episode, you'll learn how the word minimum is a psychological Trojan horse, how statements bury critical payoff timelines in unreadable fine print, why protecting your credit score can cost you a fortune in interest, real-world math scenarios showing 20 and 30-year payoff schedules, and a 7-step blueprint not just for payoff but for full financial reinvention once you're free. By the end of this episode, you'll see the minimum due for what it really is: permission to stay trapped. Part 1: The psychology and design of minimum. Banks aren't in the business of generosity, they're in the business of making money on your balances. But they can't advertise an 18% APR each month with. Pay up or else. That feels hostile. So they market the minimum payment as a courtesy. We've made this flexible so you can manage your cash flow. From a behavioral economics standpoint, that word minimum is powerful. It suggests sufficiency, adequacy, responsibility. The moment you read minimum due, your brain relaxes. You think, I'm being good. I'm not going to fall behind. That momentary relief is where the trap sets in. Now pull up your last statement. The first thing you see? Minimum payment due, typically bolded, large font top left. Underneath, in tiny type, is the legally required disclosure. If you only make minimum payments, it will take X amount of years to repay and you will pay X dollars in interest. But because that text is buried, you almost never read it. By the time you glance at the important information box, you've already set your autopay for the minimum. We're taught to equate on time with responsible. We fear late fees more than we fear interest. A small on-time number each month ostensibly keeps your credit score safe, and we buy into that narrative. But here's the catch. You can have a near-perfect score and still be drowning. A high score doesn't mean freedom. It means worthiness in the eyes of lenders. Minimum payments keep your score intact while your balance barely moves. The system equates making the minimum with financial responsibility, but never with financial health. In 2023 alone, credit card interest generated over $130 billion in revenue for banks. More than 60% of cardholders revolve a balance month to month instead of paying in full. That group of cardholders isn't an accident, it's engineered. Minimum payments are calibrated so that a certain percentage of your payment covers interest, fees, and only a sliver of principal. The industry depends on the majority of cardholders paying at or near that minimum indefinitely. Part 2: Math Exposed and the Illusion of Progress. Let's run 2 scenarios. Scenario 1: You owe $5,000 at 22% APR. Minimum due is 2% of your balance, initially $100. Plug those numbers into any free amortization table and you'll see it takes about 30 years to repay. You'll end up paying roughly $12,300 total, and $7,300 of that is pure interest. That's not a loan, it's a life sentence. Scenario 2: Same balance in APR, but you commit to $150 per month fixed. Your payment is no longer allowed to shrink as your balance shrinks. Outcome: you pay off in just under 4 years, pay about $6,200 total, and only $1,200 is interest. Why don't we all do scenario 2 automatically? 3 human factors conspire against us. Present bias. We overvalue immediate comfort. Planning fallacy. We assume our future selves will be more disciplined. And debt numbing. We acclimate to adversity and stop feeling the burden even as the interest snowball grows. Every "I'll tackle it later" mindset is exactly what lenders bank on. Meet Angela. Angela graduated with a $2,200 balance at 20% APR. She paid the $44 minimum religiously for 13 years, paid over $4,000 total, and still owed $800. She never missed a payment, she just never questioned the system. If you think, "I'm doing the right thing by never missing," remember Angela. Before we go any deeper, take a second and look at your latest credit card statement. Ask yourself, how much of your last payment went to interest versus principal? How long would it take to pay off that balance with minimums? Most people never ask. And we know you're not most people. Leave a comment below. Have you ever fallen into the minimum payment trap? You're not alone, and your experience might help someone else wake up. If this is already hitting home with you, give us a like and subscribe now. We're just getting warmed up. Part 3, the 7-Step Freedom Blueprint and beyond. This isn't just about payoff. It's about psychological liberation and mapping your wealth-building future. Step 1, freeze new debt. Literally freeze your card in a block of ice or disable it in your banking app. You need a clear no new debt boundary. Step 2, automate above the minimum. Call your issuer and set auto-pay to a fixed dollar amount, never a percentage. Aim for at least 20% above your current minimum. Step 3, create a visual payoff tracker. Use a whiteboard, chart, or app. Every $50 you pay above minimum, color in a box or slide a marker. Dopamine from small wins rewires your behavior faster than spreadsheets. Step 4, reclaim drips. Audit all recurring charges, streaming, software, apps, subscriptions you forgot. Cancel what you don't use. Redirect those $5 to $25 monthly trips straight to debt. Step 5, boost income. Side hustle, negotiate a raise, sell unused items. Every extra dollar above baseline goes to debt. Remember, lenders can raise your rates. You can raise your income. Step 6, run a payoff sprint. Pick a 90-day window. Throw in any windfalls, bonuses, tax returns, gifts, all toward debt. Creating urgency accelerates payoff and builds momentum. Step 7, post-debt wealth map. Once you hit 0, map out your next 5 years. Emergency fund, retirement contributions, investments. Celebrate financial freedom with an experience, not a spending spree. Advanced tactics, negotiation scripts, and rate reduction. Once you've automated payments above the minimum, call your credit card company to ask for a lower APR. Here's a simple script. Hi, this is your name, account ending in last 4 digits. I've been a loyal customer making on-time payments for X months. I would like to request a rate reduction to desired rate because I have seen that offered to similarly rated customers. Can you help me? If they refuse, mention competitor offers. I have an offer from other card company at rate X. I prefer to stay, but not at my current APR. Leverage the fact that you automated higher payments and plan to pay off in a defined time frame. Many issuers will accommodate to retain profitable customers. Mindset shift from debtor to investor. As your balance shrinks, reframe. Every dollar above the minimum is an investment in your future, not a cost. Visualize interest saved as money you now control. Create a saved interest category in your budget and watch it grow. Then, once debt-free, channel that cash flow into an emergency fund, aim 3 to 6 months of expenses. Then retirement, 401k, IRA, then taxable investments. If you found this eye-opening, the next episode in this series will shift your entire approach to money, financing versus saving. What's the real cost? We break down the psychological traps of buy now, pay later culture and reveal how financing turns small conveniences into lifelong cost burdens. Watch it next and start protecting future you from decisions made in the moment. Subscribe to FinFlix if you want honest, clear financial education without the gimmicks. Share this video with someone stuck in the same loop. And in the comments below, answer this. If you only made minimum payments on your current balance, how long would it take you to be debt-free? Let's normalize the math and then let's beat it together. See you in the next video.